Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Today we want to talk to those taxpayers out there that have college-age children and you're getting ready to send them off to school. We want to talk about education credits, primarily I believe the American Opportunity Tax Credit, how to take advantage of that. I've got Patricia Nass with us, our tax partner. Patty, what can you tell us about the American Opportunity Tax Credit?
Sure. So it's a credit that is partially refundable, and it's up to $2,500. So what it is that your first $2,000 in expenses that you spend, you get 100% of that as a credit. And then from the additional $2,000 in expenses, you would get 25% of that credit. So you would have up to $2,500 partially refundable credit if your college-age students qualify. So there are obviously some limitations to this. If you're single and your dependent's in college, and if you're single and your income is between $80,000 and $90,000, it starts getting phased out. And then over $90,000, you wouldn't be eligible for the credit. And if you're married and the same thing, then it's $160,000 to $180,000. It starts phasing out, and then you don't get it after that.
So as far as expenses go, what is a qualified expense for this credit?
So generally, it's your tuition payments that you're making to the school. If there are direct enrollment costs that you have to pay to the school, and then if there's course materials that you need for those courses, you don't have to do the course materials through the school, but they are needed to be required for the classes that you're taking in order to take that as a qualified education expense.
Yeah. So in addition to the American Opportunity Tax Credit, we also have what's called the Lifetime Learning Credit. How do those two compare?
Sure. So the American Opportunity Tax Credit is only for your first 4 years of undergrad. So if you're taking longer than that, if you're going to graduate school, you can't use that credit. However, the Lifetime Learning Credit, you can. So the Lifetime Learning Credit, it's not as strict on what the rules are for it, but it's also not as much of a credit. So the credit's up to $2,000, and it's 20% of up to $10,000 in your expenses. So whereas the first one, your first $2,000 in expenses, you're getting back in a credit. This one, $2,000 in expenses, is only getting you a $400 credit. So obviously, you need more expenses there. But it's really for anyone. It's for anyone who's going back to school. If you're working and you're bettering your career, you have these classes that you're taking, you can use this credit towards it as well.
Are the income limitations the same?
Yes, the income limitations are the same, between $80,000 and $90,000 if you're single and $160,000 to $180,000 if you're married.
What about the qualified expenses? Are those the same as well?
Yep, those are all the same as well.
Can a client claim both credits in the same year?
No, so you can so you can claim the same credits, but not for the same expenses, the same student.
Gotcha.
So, and the Lifetime Learning Credit is a maximum per tax return. So if you have a couple of students in your, that are going back between your husband, yourself, your children, that's a maximum of $2,000 for the entire tax return.
Gotcha. Well, that's really good information, Patty. If you are a taxpayer that has children getting ready to go into college and you've got questions on how these tax credits can help you, feel free to give us a call and we'll help you out. Thanks.